Welcome back. You're watching Big Deal and we are discussing the FY25 deal trends. Now, Vivek, going by the trends at the moment, last year we did see some good M&A play and many instances of big competition between conglomerates in certain sectors, old economy sectors. What is the trend that you're picking up when it comes to the large conglomerates, because they have the money power and they could really be most active on the deal street?
I think one of the things that is happening is that larger businesses have access to very wide pools of capital. And therefore, when they're thinking of driving value across the entire economic ecosystem, they're able to pick the sectors. And even if they don't have, let's say, market leadership position in a sector, they're able to very quickly purchase assets which give them that position. So if you see any of our large conglomerates, right, Tata's, Reliance, Birla's, etc., they've all defined what sectors interest them most and then are willing to lay out the necessary capital in order to get to leadership position in that segment. Some have chosen consumer-oriented businesses, some have chosen manufacturing infrastructure-oriented businesses, and that's a matter of choice that the conglomerate makes in terms of determining how its return on capital employed and how its parameters work best. But in the sector of choice, we are seeing a lot of activity by the conglomerates. In fact, it's very interesting. I mean, on the ground, as we see various deal processes roll out, largely strategic deals are being led by either controlled private equity players or by these large conglomerates who want entry into a particular sector. So I definitely feel that from a large conglomerate standpoint, we will see that the coming couple of years at least are very active in terms of their deal momentum.
Right. So very active, and the animal spirits look like are back, Devashish, because Birla Group is just so active on all fronts, and they are such a large, diversified conglomerate. From the Reliance house, well, we are expecting very big things coming up, and a large media deal got done. Tatas have been so active. Their first IPO after decades also came in, and lots of other aspects are also really coming up to become a big player in also the digital space. What do you think is the trend in the conglomerate space, and which are the sectors you think are going to be most active in this?
Yeah, I think before the trend, I think let me just throw some data points. If you look at the last 5 years, I mean, the way the M&A market has kind of transformed, I think there's been a secular bull run in a way in terms of fee pool. And if you look at the shape of the market, sponsor activity has gone up literally 2x in terms of a share of the pie. And what has come down is strategic inbound into India. And the balance is kind of equally split between domestic, strategic, as well as outbound. I think that's generally largely been the trend. And I think the trend going forward is going to be driven by, I think, 2 or 3 things. First is, what are the large conglomerates in India, corporates are thinking in terms of build versus buy? The second thing is, how are sponsors thinking for the next cycle of investments? And the third thing is, to be honest, the nature of the capital market, because 2 years back, where strategic options was on the table for a sponsor asset, today that option has given away to capital market exit, right? So these 3 factors will shape the way I think the M&A market will shape up. And in terms of large conglomerates, I think the way, apart from finding the core strength, which is this corporates kind of targeting, they're also playing along the thematics that I just listed out 15 minutes back, which is the broad India thematics, manufacturing, self-reliance, energy transition, in a way, and providing a platform for a capital flow from outside in, strategic partnership, and also in a way leveraging your existing customer ecosystem, try to monetize in adjacencies or newer areas. So that animal spirit is pretty much back. In terms of health-wise, I don't think we have seen the Indian corporates as strong as any time in our recent memory.
As confident and as positive. Absolutely. And the turn of the capex cycle after over a decade in a big way is one of the very big game-changing moves that has really taken place in the last few months. But one thing that 2 important aspects that I picked up, Devashish, from what you said. One is build versus buy. So a combination of both is really taking place. They're building also and they're buying out also. So it's all about diversification and beefing up portfolio. Yeah. And the second important thing you also mentioned is going ahead with the block deals instead of strategic deals. Let me throw this question to Vivek. Vivek, do you think that, creative M&A, getting good strategic fit, PE exits by leaving the company at a different level, by beefing it up with the right partner, all that is going to be somewhere dwarfed because of the easy exit that the market is providing?
Look, I think it is an absolute fact that a lot of transactions that would earlier have been, let's say, financial sponsor to financial sponsor sales, private equity to private equity sales, are today very quickly morphing into public market processes simply for the reason that financial sponsors are unwilling to lay out that kind of multiple that the public markets are providing. At the same time, I think fundamentally one needs to understand that yes, we may have an exuberant cycle due to allocations, due to a host of other factors that we have discussed over the last 20 minutes. But fundamentally, I think deal making in India will continue to be driven by basic economics. And that basic economics is India will continue to be an economy which, at least for the next decade or so, will grow super strongly. We are just at that stage of our growth cycle. Politically, if we are stable, we will continue to have all those kinds of impulses which allow for deal making. We've seen that in other countries around the world. The point that Debashish made around infrastructure is also a point where huge capital flows happen at a time that infrastructure is being built. So I think the next decade in that sense is fundamentally a sweet spot. We may have some blips along the way in terms of how public markets are performing versus how private deal making activity is being priced. And today, yes, there is an arbitrage where public market seems to offer a better exit. But I don't necessarily view that as something that will stay fundamentally over the next 10 years. Over the next 5-10 years, I say that deal making will be super strong, and there will be phases where public market holds sway, and there will be phases where strategic deals, private equity control deals, those kind of deals hold sway. Even now, actually, there is a fair bit of the latter happening.
Right. The only thing is that the valuation mismatch between the private and the public market made deal conversions very difficult. And one of the largest global private equities that I met this week was lamenting also about the time that is consumed in consummating a deal in India. And we know of one transaction which took 2 years and then finally got called off. So those are the risks and the challenges also that we are dealing with. Final word to you, Debashish. Few key themes and the sectors in focus, which is keeping you most busy right now?
Yeah, I think themes we went through, right? I think those are 4 or 5 mega trends which will continue to. I think India will be the manufacturing capital of the world. We have 1.4 billion bustling population. Yes. With the rising disposable income, I think.
So private equity also wants a share in that particular pie.
Absolutely.
But which sectors are you seeing maximum amount of inquiries coming in?
Well, I think the 4 evergreen sectors continue, right, which is financials, consumer services, and healthcare. And beyond that, I would probably put my money on infrastructure, energy transition, and increasingly industrials.
All right, Vivek, your sectors of choice.
I think infrastructure to me will be a sector which over the next 5-7 years will be super strong. And then second, I would say consumption-based themes, whether it's consumption-based themes on the financial services side or it's consumption-based theme on the consumption side as we generally understand it. So to me, these 2 areas will be super critical areas. India providing services to the rest of the world, IT, pharma, etc., all that will continue on its normal path.
Yes.
But if I were to pick 2 blockbuster sectors from a valuation standpoint, I would pick infrastructure and consumption-based themes, and I define consumption more broadly to say both financial services consumption as well as traditionally how we understand consumption.
Vivek, I will add one more consumption. I will add one more consumption to that, which is media, the digital media. That is one consumption play hasn't played out, but big boys are really ready. But I absolutely take both of your points on infrastructure and manufacturing coming back. I hear a lot of infrastructure IPOs are also lining up because the public market is ready to give that play to it. But one specific aspect that I have seen, which I'll leave the viewers with that thought, is that a lot of promoters now want private equity money to come in, but they don't want to exit their company immediately. They want to hold on, let private equity build that value, and then exit with them later. That is one sense that I'm getting from the promoter community at the moment. So it will be very interesting to see all these really play out as India gets more exuberant and confident about its growth and therefore deal making. Thank you so much, Vivek, as well as Debashish, for joining us. With that, it's a wrap on this edition of Big Deal. Keep it to CNBC TV 18.